Hey, welcome to the morning brief. Today is Wednesday, August 26th. Why are you watching this? Because we've got cool stuff happening today. Tons of news coming out. We want to evaluate and look at that, as well as do our regular analysis before the market opens. So taking a look at forex calendar, you can see that here at 8:30 we just had a whole ton of numbers. We had core PCE price index. This is inflation, and it came in as expected at 0.2%. The point here is that this is a positive number, which is bad. It means that we are continuing to have inflation and it is growing at 0.2%. Preliminary GDP quarter on quarter came in at 1.5% as expected. So GDP, that's a good number. Preliminary GDP price index quarter over quarter, this is actually a bad number, 6.4%. This is telling us that prices are increasing, and we should be concerned about that. Core durable goods orders month over month came in at 0.4%, which was less than expected, but this is still a positive number, so it's not necessarily as bad as it looks. Core durable goods orders month over month was 1.1% versus 0.4%. So again, a decent number. Personal income was 0.4% versus only expected at 0.2%. Again, a good number. And personal spending was up. But the good news is that the income increased faster and more than the personal spending. So that's good. At 10:30, we have crude oil inventories. And at 11:45, we have FOMC member Barkin speaking. And that is it for the scheduled news today. But we had some real big numbers come out today. Let's take a look at what the market actually did. Yesterday, we were up. We're almost getting a bear flag. You can see this flagpole here down to a flag pattern, a bear flag. It's kind of rare to see a bull flag and a bear flag right close together, but it sort of looks that way. We are below the 20-day moving average, which basically means that short term we are down, medium term we're sideways, long term we are up because we're above the 200-day moving average. We are creating this little band here of consolidation. To get going, we got to break through that high right there, 77.15. To get down to the bottom side, we're going to have to break through 76.53. Where can we go on the bottom side? I think we could easily come down into the 76.20 area. If we could break back to the upside, I think we'll go up to that high volume node at 77.37. Volume again yesterday was below average, so just kind of really ugly here in August. Taking a look at the inventory. Inventory was positive on positive price action, so there you have it. Although, interesting, big divergence here. The price is basically going sideways here, and the inventory was definitely coming down towards the end of the day. So some intraday divergence there, but the end result was still positive inventory versus positive price action. So not going to get into that. Overnight action, you can see here is the reaction to the, first there was a little spike to the top and then it hit it hard to the negative side. Probably the price index was the most important there that the market does not like. Overnight action was approximately 24 points, which is relatively low, surprisingly. So where's support and resistance? Well, we've got some support at 76.76. The overnight low is 76.70. So a little bit of confluence and a band down here around 76.60 to maybe 76.62. We get below that, it gets ugly. Resistance on the top side, 7,700, of course, is the whole number. 77.06, 77.14, a little bit of confluence around 77.22. Stock Trader's Almanac for today is 57.1. 57.1% chance the market will be up today from the Stock Trader's Almanac. Hope you have a great day. Remember to subscribe and like. See you tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.